Are you self-employed, a landlord, or both maybe? There's some big changes coming down the line that you need to be aware of, and we're less than 1 year away from them. I'm Mitesh. I'm here today with Suzanne Briggs and Levin to talk about those changes. Can you tell us a little bit about what Making Tax Digital for Self-Assessment actually is?
So Making Tax Digital is the government's initiative to improve the timeliness and quality of information that they receive. So what the impact of this is that impacted individuals will need to keep digital records and make quarterly returns as well as an end-of-year declaration. This is going to come in from April 2026.
So can you tell us a bit about who's going to be impacted and when?
Self-employed individuals and landlords are going to be brought into Making Tax Digital from April 2026. It's going to be brought in a phased approach. So initially, individuals with gross income, qualifying income of more than 50,000 per year will need to file quarterly from April 2026. From April 2027, that threshold is reduced to 30,000. And then from April 2028, it is reduced to 20,000. Now, at the moment, there are no proposals to reduce that threshold any further, but we anticipate that will happen eventually.
So for those impacted, what will they have to do differently compared to what they do now?
So at the moment, self-employed people and landlords file annual tax returns, and they have to file them by 31 January following the tax year end. From April 2026, impacted individuals will need to file quarterly returns or updates with HMRC, and they will have to file within 1 month of the end of the quarter. They will also still have to do an end-of-year declaration with the same filing deadline of 31 January following the end of the tax year.
So as part of this Making Tax Digital, I understand clients will have to start keeping digital records. Tell us a bit about that.
That's right, yes. So for every self-employed business, for every property landlord, they will have to effectively record and store all of their transactions digitally on a software. The idea being, as Suzanne said, that software will be able to communicate with HMRC electronically. So that doesn't mean that they've got to scan all their receipts into a software, but it does mean that the details of the transactions, so the date, the amount, the category of the income or expense, they will all have to go into a software. And by software, there are two types that really can be considered. So either a software that creates the digital record, so something like Xero, which is one of the cloud accounting softwares. So software like that is really good. It can create the records and it can do the quarterly updates. Alternatively, there's something called a bridging software, and there's lots of different ones on the market. And what they do is they effectively bridge between a business's current record-keeping software, which might just be an Excel spreadsheet, and HMRC. So if a bridging software is used, the key is to make sure that no data is manually input. Right. So if it's a spreadsheet, you'd be looking at linking cells, and if it's something where you can export data and then import it into the bridging software, that would also be considered digital.
So from a practical perspective, what could an individual do if they currently keep everything on a spreadsheet? Yeah,
so spreadsheets are fine, and for very simple businesses, that might be what a business chooses to do. Effectively, the bridging softwares are there to mean that the data on the spreadsheet can go into the bridging software, and that can just be linking cells from the spreadsheet into the software, and then it's the software that then submits the updates to HMRC.
So there's still a risk of keying error at that point?
There's a risk if someone chooses to get the data from the spreadsheet into the software through keying, so we'd always advise that is a digital link, that is the requirement. Ultimately, if a cloud accounting software, something like Xero, is used, that just takes away that risk. And even for very simple businesses, these days the cost of something like Xero is pretty minimal, so we'd be encouraging businesses to look at softwares like that.
So is there things that businesses or individuals should be doing now to get ready for Making Tax Digital?
Yeah, there are. I think there's probably three things that I would suggest that businesses start to think about. And one sounds very straightforward, but actually I'm not sure everyone would necessarily know what is your income. So for people that have potentially got multiple businesses as well, so just really understanding what the levels of income are, when you're going to be eligible to go into the MTD regime. So that's the first one. Secondly, I would say just to look at banking arrangements. So ideally, every business would have a business bank account, which is separate to a personal bank account. And if you've got a self-employment business and you've got a property rental business, then just having two separate bank accounts for those as well. Makes it much easier when we're keeping the accounting records to have separate bank accounts that can then flow into the software. So that's the second one. And then thirdly, I think if someone could just assess currently how they're keeping their records. So anyone currently filing tax returns will be keeping records of some description, whether that's a cardboard box of receipts, whether that's a spreadsheet or whether they're on a software. If they're on a software, is that MTD compliant? And if it isn't, then perhaps now's the time to think about changing to a different software.
Amongst all of this, I understand HMRC are also introducing a new penalty and interest regime. Can you tell us a bit about that?
Yes, so there's two parts to that. So one is around the submission itself, and then one is around the payment of tax. So currently, if a tax return is submitted late, it's a £100 flat penalty, so no one can escape that. And then there's further penalties issued based on the amount of tax that's payable at a rate of 5%. So I believe those kick in after 6 months and a year. Under the new regime, HMRC are moving to a penalty point system, which is like the current MTD for VAT. So effectively, a submission goes in late, someone gets 1 penalty point. Once they've got 4 penalty points, they get a £200 penalty. Now, those points accrue, but they can also be taken off the record after a period of what HMRC call good behaviour, which can be different in different circumstances. And then with regards to the payment, so currently if tax is paid late, then there are penalties that are issued based on the amount of tax that's payable again, and those come in after 30 days, and then again after 6 months, and again after 12 months. Under the new regime, they've only got 15 days to pay the tax, and then penalties start being levied at 3% initially, but then after 31 days, that rate goes up to 10%.
So HMRC is getting serious.
They are getting serious, yes.
But also, we're going to have 2 penalty regimes working alongside each other, aren't we? So we're going to have people who remain in self-assessment on one regime.
Yeah.
Which is the £100 late filing penalty, etc. And the people on the new regime who are going to have a point system. So.
Yeah, and if someone's also registered for VAT, they could be accruing points on their VAT submissions and on their MTD for income tax submissions. So the moral of the story is just submit your returns on time and pay your tax on time.
So Suzanne, we have this new singing and dancing system that everyone or most people fall into. Are there any exclusions?
Yes, apparently there will be exclusions for those who are digitally excluded. So this could be by reason of age, disability, or religious reasons. You're going to have to apply for the exemption, and HMRC have not released any guidance as to how individuals will be able to apply to be exempt from making tax digital on the basis that they are digitally excluded. So watch this space.
I think that's all we have time for. Thank you, Suzanne, Stephanie. So folks, if you'd like to find out more about making tax digital, or if you've got any further questions, then please do reach out to Suzanne or Stephanie or your usual Blick Rothenberg contact.